It really depends on what happens with this economy. And as long as the Fed insists on saying we cannot make informed decisions without official data, it gets more and more difficult as a factor of time, despite what we're hearing from corporate America.
Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. It is so wonderful to welcome you back to the show. Great to see you as always, Danielle. And we are recording after the FOMC meeting minutes. And I know the last time you and I spoke on Fed Day, you wanted to dive into those minutes and see what they were talking about. Great to see you. And what's your big picture reaction?
Well, I mean, I think the biggest takeaway is the obviousness with which they broadcast how deep the divisions are right now on the Federal Open Market Committee. You know, there were several members who felt it would be appropriate to continue cutting interest rates into the end of the year. There were several who felt that they should not have cut at that meeting, meaning a non-voter beyond Jeffrey Schmidt of the Kansas City Fed who dissented. A non-voter also would have dissented. And then there were many who felt that it was appropriate to pause after the October 29th rate cut and not take any more action until after the new year, until they had more clarity and could get past their anxieties about inflation, which, by the way, has all but disappeared. The Bank of America conducts a fund manager survey, and the trade war, tariffs, inflation dropped out of the top four. So it's not an issue on Wall Street. It's not an issue on Main Street. It's not an issue in corporate America. It's an issue for consumers, but it appears to still be an issue for the Federal Reserve. So it's a very interesting backdrop where the tone deafness appears to be deafening.
Okay, let's explore this because you and I have talked about this, that even, Fed Chair Powell at the presser came across as tone deaf. I take it you're continuing to see that in the minutes. Elaborate a bit more on that. It seems like there's a disconnect then.
Well, I think I don't really think there's a disconnect as much as there's just overt politics going on the Federal Open Market Committee. I've said it before and I'll say it again. I think we have better monetary policy making after January when Stephen Myron leaves. I doubt that Treasury Secretary Bessent would green flag another individual who was not going to be wanting to take an entire term, as opposed to just taking a short hiatus from work. And so I think policymaking may get more conciliatory after the January meeting, but then, it really depends on what happens with this economy. And as long as the Fed insists on saying we cannot make informed decisions without official data, it gets more and more difficult as a factor of time, despite what we're hearing from corporate America.
Mm-hmm. And, speaking of data, we're just not getting a lot of the data, especially around the labor market. Other than tomorrow, if I heard we were chatting before, we'll get the September jobs report tomorrow, Thursday, but there won't be another jobs report until after the December FOMC meeting. So they're probably flying blind then.
Well, Julia, my point that I was trying to make earlier is that they're going to say that they're flying blind. And there's, it's an important distinction because we know that they're not flying blind. We know that we had a 15-year high in October layoffs that were announced. Subsequent to that, Verizon announced that it was going to be cutting 15,000 workers. The data have not stopped accumulating. ADP has come up with a weekly report that tells you what private payrolls are in the United States. It's bounced off of its lows, but there's still net job destruction, according to the largest payroll provider in the country, that, by the way, stepped into the breach when there was no data and ended up making to the public, to the economics community, something available on a weekly rolling basis. This is the most accurate data that we've had in decades now that we're getting it from ADP, and we're also getting it from initial jobless claims. So there's an abundance of data for the Fed to lean on. The fact that they're going to say that without official payroll data that they're not going to be able to make a move, which is clearly reflected in the markets, pricing out the December rate cut, it's emblematic of the fact that they're going to lean on anything they can, really, to give this current administration the Heisman. And I think that that's what this is all about. If I could add a tinge of irony here, this is an administration that desperately wants rate cuts. And what do you do with a Fed that is claiming to not be able to navigate through the fog? What do you do if you want them to stop cutting rates? You pull the data. And that's exactly what they've done. This November non-farm payroll report, not only is it going to be delayed, even though it shouldn't be, it's going to be delayed until December the 16th, 6 days after the Fed meets. So the administration that seems to want rate cuts has literally taken its own rate cut away by the actions that it's taken.
That is a fascinating thought. I didn't even think of that. Okay. They're giving a Heisman to the administration, which the administration has been super vocal of wanting rate cuts.
Yeah. They could have just left the November non-farm payroll report to be reported several days before the Fed met. Instead, they've now delayed it until after the Fed meets on December the 16th. And
why,
it
though?
gives the appearance that the administration is trying to hide something, which makes it even worse. But at the same time, it also gives the Fed cover if the Fed's looking for cover. So there's irony, and then there's real irony. And the real irony here is that the administration is shooting itself in the foot.
That is so fascinating. Okay. You have my wheels turning on that one. I had not even thought of that. Okay. The Fed, though, you point out, there is an abundance of data out there. And as someone who has been a Fed insider at the Dallas Fed, and you have talked about different data sources, and I think our last conversation, you said they actually do look at the ADP report. And then I don't understand, why can they? I mean,
Jay Powell's on the record in 2019 in a speech that he gave that citing the it used to be proprietary data that ADP provided to the Fed on every 2 weeks that was not available to the public, but that they had access to. Now it's available to the public on a weekly basis, which means it's an even deeper, richer resource of information and more real time. And yet they're falling back. They're actually contradicting what they said. Waller's most recent speech spoke about the ADP data and the importance of it. And it's as if they've literally forgotten what they said on the public record.
Yeah. Markets, I mean, as we're recording today, we have 30 minutes till the close, but markets have turned into the positive territory. My guess is Nvidia. I don't know why they turned positive.
It's Nvidia Wednesday. Yep.
Yeah. Nvidia is kind of underpinning everything. But I was just thinking, even last week, when we saw markets have their worst decline since April, a lot of that had to do with, all of a sudden, the rate cut was not so certain in December that it's like a 50-50 toss-up. What do you think? I think my take is you think we should have a rate cut, right?
I think that we should have a rate cut for the economy, for the public good that the Fed is supposed to serve. If, until Congress removes the employment mandate that they gave the Fed in 1978, they're obligated to pay attention to what's happening. I went back and revisited Jay Powell's resume today because I said to myself, remind yourself, Danielle, where's this person come from? And from 1997 until 2005, he was with the Carlyle Group. And there he founded the Industrials investing division of the private equity giant. And so for all of those years, he built up quite the list of contacts. And when he first became Fed chair, I think a lot of people in the markets were heartened because they said he's not just going to listen to the official data. He's also got hundreds and hundreds of CEOs who he speaks with all the time. So I had to remind myself of what Powell did before he came to the Fed. And I find it very disingenuous to suggest that the people he used to speak to, who are firing thousands of people at a time when they are not normally fired right in front of the holidays, I find it very difficult to believe that he's not still talking to these same people. Again, it is willful blindness and it is high hypocrisy.
Hey there, I just wanted to take a quick moment to thank you for watching this video, and I would really love for you to subscribe to this channel if you like this content. Over 70% of our viewers are not yet subscribed, and we are on a mission to hit 100,000 subscribers. So if you could, just take a quick moment, hit subscribe. Thank you so much for your support. We appreciate you, and back to the video. Yeah, to not do the cut just because of what's happening in the economic backdrop. I guess my other thing is, I know like people talk about the Fed being independent, and then there's a conversation on the politicization.
I can't say the word
Fed.
either.
I can't say the word politicization.
I can't say it.
The other word I can't say is strategy or strategic. I had a voice coach who worked with me on that. I still can't say it. Politicization.
We have one of our son's friends is named Rory. Rory. Forget it.
Yeah.
Can't say it.
I don't know. I probably couldn't say Rory. Yeah, Rory.
See? Anyway, okay. After this commercial, we'll be right back.
We will be right back. We're having fun, Danielle. We always have fun. Okay. I just don't get it with the Fed then. Like, I just don't understand, like, why does it matter if Trump wants a rate cut? Like, I don't understand, why does it matter, like, if they cut? I just don't get it.
It shouldn't. Look, it is Powell's job at the podium to communicate the intentions of the Fed. Powell can come out and say, we do not agree with the fiscal actions that have been taken by the current administration because they've been detrimental to the broad U.S. economy. We don't agree with continuing with deficit spending as is being done. But it doesn't matter how we feel about what the administration is doing. I am Jay Powell. I'm chair of the Federal Reserve, and I'm telling you that what we're going to do is what's right for the country and what's right for the people we serve. And that's why Congress created the Federal Reserve, to be an apolitical institution, to not be in any way influenced by politics. And yet politics is what's driving monetary policy making. It's when you think about how tenuous the situation is right now, that the world is hanging by a thread depending on what happens next with Nvidia and with Bitcoin. And the fact that if either of them fall out of bed and this great big valuation bubble that we are staring at finally begins to deflate, and the fact that the top 20% of income earners in the United States own 87% of the stocks, the top 10% of Americans control 50% of consumption in the U.S. economy. If anything happens to the stock market, we're going to go from a K-shaped economy to an underscore. It will be so rapid, and yet this is the environment in which the Fed is choosing to play with fire. And the thing is, they'll be outed because they can ignore the plight of working men and women. They can ignore it as long as the stock market hangs in there and that top 10% of earners that's worth 50% of consumption continues to fly private and go on shopping sprees on Fifth Avenue and spend to abandon. They can continue to ignore it because that top 10% can hold the whole economy. It can hold up GDP. But if that top 10% even gets nervous, the fact that the other 90% is in recession, that will become much more apparent. And then history will look back on this Fed in particular as having been so derelict in its duty to the American people that it chose to look the other way because the stock market was up.
But they've already been looking the other way because, as you and I have talked about, there's a recession out there already. There are a lot of people who feel it.
Look, you've got, I was just looking at the data before I came on. You've got 64% of college graduates ages 20 to 24 in the labor force. And this is a huge decline in terms of the employment ratio of this particular age cohort, 20 to 24. I saw another interesting little snippet. In 1993, I think 87% of all high school graduates said that they anticipated being married one day. That's fallen into the 60 percentile. That even high school seniors coming out sense the lack of opportunity, such that they're not even, they're like, well, who can get married? Who can afford to have kids? Who can afford to buy a house? That's the backdrop. This is where we are in U.S. history. And the Fed is choosing to completely disregard the bigger picture.
Yeah, when you say like this is where we are in U.S. history, and you share stats like that, it also makes you think like, what is our trajectory then, and where are we going? Because like these will have long-term consequences, not just in the moment right now of like, oh, like you're talking about like generational impacts or.
Well, that's the thing. You know, my mentor, Lacey Hunt, Dr. Lacey Hunt, has pointed to the difference between the AI revolution and other technological innovations going back through time that were accretive to jobs. And his point is AI actually allows companies to have less plant and equipment. It's the point of it. AI allows companies to permanently reduce the size of their workforces. And that is a distinguishing factor between the advent of the internet all the way back to the cotton gin, or fire for that matter, with the cavemen. AI is not going to be the productivity miracle that's being sold by people who are methodically, legally selling off their shares in AI stocks.
This episode is brought to you by VanEck's Rare Earth and Strategic Metals ETF, ticker symbol REMX. Rare earths are the hidden backbone of modern technology and defense, powering everything from smartphones and electric vehicles to fighter jets and wind turbines. VanEck recognized this early, launching the Rare Earth and Strategic Metals ETF, ticker symbol REMX, 15 years ago, well before supply chain security became a global priority. Today, China dominates the production and refining capacity of rare earths, creating real challenges for global supply chain security as these materials are essential for technological innovation, clean energy, and national security. That's why countries all around the world are racing to build their own supply chains and reduce reliance on China. As this global shift continues, investment in the rare earth ecosystem is growing rapidly, from mining to advanced manufacturing. Investors can gain access to this powerful trend through REMX. Visit vaneck.com/REMX Julia to learn more. You gave a talk recently at the New Orleans Investment Conference. It wasn't just a panel or an interview. You actually gave like a presentation. I think you also hit on some of these themes too, but
it's gone kind of viral.
Yeah, it has gone viral. Yeah. And it's, you know, this is kind of like we've seen this kind of play out throughout history too. Are you just maybe bigger picture concerned about just more of the trajectory of the U.S. more broadly then?
Well, we've spoken about demographics in the past, and we know that when you add up Gen Z and millennials, you get to 48.5% of the U.S. voting population. We can pretend that what happened here on this island with its mayoral election was an idiosyncrasy, just like we can pretend like Tricolor and First Brands were idiosyncrasies in the credit market, because it's a convenient narrative. But what if what happened in the mayoral election is more a reflection of younger Americans voting with their nihilism? And what does that say about the future leadership of the United States? What does it say about the dreams of our founding fathers of having a country that provided opportunity to everyone, not just a chosen few? So I think that we are at a critical economic juncture in this country. Those who forget that Rome fell because of income inequality, you have to remember the lessons of history. Or, dare say, rumor has it, you repeat them.
Yeah. Yeah, they rhyme. And, you bring up a point too, like our path that we're on. It kind of makes me wonder, like, will there be a reckoning, or do you have to have some sort of crisis to get back on the right path or something? I don't know. It just, yeah.
Well, that's what U.S. history says. Right? That is what U.S. history says. It says that every 60 to 80 years, as Neil Howe demonstrated in the fourth turning, the last time we had something that was of this magnitude was the civil rights from the 1960s. So, if it's every 60 to 80 years or so.
Yeah, the saculum, it's like, the 80 years. Yeah.
It's getting there. Mm-hmm. And you feel it. You feel it when you hear about kids who are 22 years old coming out of college and cannot get a job. And to tell somebody, oh, that 4 years of education was just wasted, that can really jack with your mind.
Yeah, definitely. We've had Neil Howe on. I've not had him on in over a year, but he did say that we are in the fourth turning right now, and we're going through that.
Well, COVID. Yeah. I'm friends with Neil, and he basically said that COVID acted as an accelerant.
Interesting.
Because we gave people so much during COVID, and then we took it all back. So it really angered them. So it accelerated the turn.
If you were a policymaker, or you were at the Fed, or I don't know exactly, we can do whatever in the hypothetical, what would you do?
Well, first I would get a bulletproof vest, and then I would say quantitative easing is gone forever. And then I would
don't name it something else and do the same thing, right?
Don't name it something else and do the same thing. Don't. Stop interfering in markets. Take the Fed funds rate down to 2% because we're in a terrible recession, but never go below that 2% floor, because anything beneath that, all it does is inspire speculators. Regulate non-banks as rigorously as you regulate banks, so that one generation of regulation doesn't just create innovative finance bankers who are going to be like, okay, fine, if that's what Dodd-Frank did, then we'll just work our way around it. And lo and behold, a few years later, the non-banking sector is a lot bigger than the banking sector. Why? Because they moved where they can go to make money. So I don't know, if I was in charge of the world, if I was in charge of the Fed, if I was in charge of a regulatory agency, if I was president of the United States, I would just dispense with all the bullshit. Excuse my French. I've never done that.
I love it. Danielle for president. I will sign up to be your press secretary.
And I would let my press secretary speak the truth.
Oh my gosh.
But it's, and again, the reason I started that out by saying I would get a bulletproof vest is because nobody wants to do this. Nobody wants to say we need to let the markets be free, because that's what our founding fathers were. That's what they advocated for. That's why we fought to escape Britain.
Well, on that point, what do you make of this kind of conversation around like the government taking stakes in companies?
Oh, for God's sake. It's un-American. I don't have much more to say about that. I just had a Forrest Gump moment.
Yeah. I guess even just more broadly with like the speculation, you did mention Bitcoin. Oh gosh, where's Bitcoin right now? Let's look. It is, it's 89,000, but it's
it's well off its lows.
Up a tiny bit. Yeah, it just turned as I looked at it.
I don't believe in coincidence. And there's a chart that Bloomberg put out a few days ago that shows that there's like a 90-something% correlation with the NASDAQ 100 and Bitcoin. That is not what we call coincidence. Some people might be like, oh, causation is not correlation, blah, blah, blah. I'm sorry, but when you're moving in lockstep, Bitcoin right now is a pure reflection of animal spirits, if it's moving in lockstep with the NASDAQ 100. The fact that it's strong enough to dictate the path of the markets tells us how far along we are in terms of the speculative mania, how long this has gone on. And you know what? Maybe we do need a barometer. Maybe we do need something to tell us when the gig is up. Because when you start to look at the amount of debt on the balance sheets of the largest technology companies. I mean, a year ago, we were talking about their tremendous cash flow. A year ago, we were talking about how strong their earnings were. A year, we were having much different discussions. Now they've put on hundreds of billions of dollars in debt. Some of it off balance sheet, some of it on balance sheet. Hey, Enron, hey, WorldCom. So, but it's all public, which means that anybody who's now buying into this AI narrative is saying it's different this time. They can also take debt on, and they'll be able to get to their pro forma numbers, even though they're making They're making millions of dollars in earnings, but they're borrowing billions. It's just, but in that kind of an environment, fine. Let Bitcoin tell us what our fate is, because at least we recognize that the emperor's naked. I said naked like I'm from Texas, but anyways, naked.
Yeah, naked bottomed. Okay.
Rory, can't say it.
Rory, I know, we're having a lot of fun. I don't know if this has always been the case, but isn't it kind of strange, like how much weight we put on one company and one company's earnings and all eyes on this one company and the stocks popping?
Somebody just put in my Bloomberg chat a chart that showed the betting probabilities of Nvidia beating its earnings, and in the last 2 hours of the trading day, it had completely collapsed. I mean, there's a betting market.
I'm looking right now. I'm looking on, let's see what, and they also, they beat their.
They haven't reported yet.
I don't know. I'm looking just to see if, I can't find it on the betting market, but I'll have to look, because it was like, what will Nvidia say on their call? They have there's so many markets now.
And that's, you know what, Julia, what you just said, there's so many markets now. There was one yesterday. Yeah. We've become this. There's no. I'm starting to think that there's a reason nobody's in Vegas. Yeah, we don't need to go to Vegas. We can just trade.
I went to Vegas this summer.
We can bet on anything we want. Anything.
Oh,
just put it on red.
All right. So there is a betting market. You're right. I just went on Polymarket. Will Nvidia beat quarterly earnings? 86% chance right now. Yeah. I was on, there was a betting market yesterday on Kalshi on like, will Bill Ackman say, "May I meet you," on his Twitter Spaces? And he did not, I don't think. But yeah, there's a market for anything. And also, I did go to Vegas this summer for Backstreet Boys. Totally empty, other than for the concert.
Yep, scary. Well, that's what happens when you charge $31.59, including tax, title, and license, for 2 beers at a pool.
Yeah. Yeah. Oh, crazy times. All right.
And it was so shocking. I remember the $31.59 part. So.
Yeah. You mentioned like your Bloomberg chat. I always like getting like intel from you. You have such a pulse on like what the institutional players are talking about. You've kind of mentioned some things, but what is that interesting conversation happening right now?
You know, it was interesting. Yesterday, we actually shared a chart, not of Bitcoin, but of Alibaba. And, what if that was, what if the idea was, what if what's breaking in the US markets actually has the capacity to be contagious? And it was like, ooh, deep thought. There's a lot of technicians in my chat. So there's a lot of charts running around and resistance levels. And, but when you start to, you use the word crisis. I mean, when you start to talk about the possibility of contagion, and we're talking a lot about insurance companies and credit rating agencies in somebody's, home in New Jersey, and just the ridiculousness of it all. The conversations are very, very interesting. We talk about private credit and private equity a ton.
Mm-hmm. Yeah, I first got turned on to that because of you when we were together after one of the FOMCs. Probably, I don't remember which one now, September maybe.
That's the other thing. The Fed is actually ignoring liquidity right now. When you start to get violent moves in the market, that is a reflection of liquidity drying up. If they don't cut on December the 10th, they're opening themselves up to come in with an intra-meeting emergency cut.
Wow. Okay. The next time you and I will see each other.
Wait, 2 seconds.
Yeah.
December 2018 FOMC meeting. Powell stood tough. And we had the bloodbath on Christmas Eve, and he had to do a full 180. He's actually not just read this chapter before, he starred in the movie.
Was that because of the repo?
It was because liquidity dried up. We didn't have a single junk bond. No. That was the next year. That was not QE. That followed it. But in late 2018, there hadn't been a single junk bond issued for 41 straight days. And that was becoming a globally contagious issue. And Powell was forced to back down and reverse his hawkish stance from the December 2018 FOMC meeting.
Got it. Okay. If the next time you and I will see each other will be after the December FOMC.
I know.
What would be your question for Powell?
My question for Powell would be, why have you stopped talking to your contacts? Why can't you hear the voices of the people doing the firing and the people being fired? And then my next question would be like, go out in front of the Eccles building and catch an Uber. And you tell me if the person driving that Uber isn't overly educated or should be retired.
Danielle, before I let you go, just to go back one more time, if the Fed does not cut, they're opening themselves up for an intra-meeting emergency cut. Why?
It's highly feasible. Look, we've got some liquidity issues here. They're going to stop QT. They're literally doing balance sheet policy that is conflicting with monetary policy at this point. So they're recognizing that the plumbing of the system is potentially in a dangerous situation, and yet they're holding monetary policy tight at a time when Bank of America has told us that now small business earnings have turned negative. Small businesses in the United States are now losing money. You cannot tell me that interest rates are prohibitively high for the mom and pops in this country.
Mm-hmm. Does this also have to do with the New York Fed meeting with the Wall Street firms over the lending facility? Does it have?
Yeah, now you're getting down and dirty.
I feel like the New York Fed is probably one of the really important ones to pay attention to.
It is. It's where the markets desk lives, and the Fed wanted to find a new mousetrap to dispense with the stigma of going to the discount window. Okay, fine. But the standing repo facility that was created a few years ago that was supposed to destigmatize accessing funding directly from the Fed, you're still going to have your name revealed in public. Maybe there's a 2-year wait, but it's still a very, very bad look. They didn't take away the stigmatization. Wow, I nailed that word. But they didn't take it away. And that's why this meeting that happened at the New York Fed, the big broker dealers said to the New York markets desk, they're like, you can bring a horse to water. You cannot force it to drink. And with repo lending going through the roof north of the Fed's ceiling, I'm speaking in gibberish right now, it shouldn't be. There shouldn't be funding that's going on north of the Fed's upper band. And yet it is, meaning they don't believe in the sanctity of the liquidity facility that the Fed created and could be backing themselves into not QE 2.0 easily.
Danielle DiMartino Booth, CEO and Chief Strategist at QI Research. I always enjoy our conversations. I look forward to our next in-person one. Before I let you go, let folks know where they can find you, support your work, and any parting thoughts that you'd like to leave this audience. The floor is all yours.
Well, thank you, Julia. Please come to dimartinobooth.substack.com. Whether the government shut down or not, whether the data's there or not, we pump out the Daily Feather every single trading day of the year. We love our cult following. Please come join. And if you're an institutional investor, come to QI Research and jump into that QI Pro chat room and see what's all going on there. And of course, follow me on what formerly known as Twitter at DiMartino Booth. This is my parting shot. We don't take anything with us when we're gone. The legacy that we leave on this planet is our children. And when high school seniors are indicating that they don't want to get married and have children, that's another legacy that we're leaving. We're leaving fewer of us. And this Thanksgiving, when you come together with your family, you need to be having serious discussions about who in the country can be the next generation of leader to bring the American dream back, not to just the top 1% or the top 10%, but as our founding fathers envisioned and what we've always been thankful for, to be Americans, opportunity for all. Somebody out there wants to represent all of us. It's not the Fed. It's not the current administration. It's not the Republicans, and it's not the Democrats. But somebody is out there. People are out there who want to provide opportunity to all Americans and come together around the table, give thanks, and talk about the solution.
Danielle DiMartino Booth, thank you so much.
Thank you.